Well, I know everybody worked today and this is dinner hour, so we're gonna go ahead and start. First, I want to say that my name is Corliss Turner and I am the founder of Voices for Rockdale. Voices for Rockdale is a community organization. Sorry, someone texted me. It's a community organization with no political affiliation. The group was formed to keep all residents informed about things that affect us all in Rockdale County, to unite the community, to engage in working together for the betterment of the county and hold elected officials accountable, to have a say in how our tax dollars are spent and demand transparency. Change takes involvement and involvement brings about change. And what that statement means is that we have to do something different from what we've been doing. Anything that we don't like or disagree with in the community, there's no way for them to hear or know what the citizens want unless we participate in. You can attend the meeting in person. You can view it on the county website as well as on Facebook. We are just citizens trying to create our own. I don't think that we have to have elected officials to become a community that looks out for each other and all have the same mission and the goal, and that's to call Rockdale County home. This meeting is with the tax commissioner, Tisa Smart Washington, and also with the director of assessments, tax assessor, Will Barkley, Director Will Barkley, I apologize. And the purpose is that there's a lot of exemption and things available to citizens that they aren't aware of, and they're actually not getting the what they qualify for. I'll just give you one example, and then I'm going to turn it over to Will. We have been working the Board of Election, collecting signatures for a petition. There was a gentleman there that was 72 years old. He had been in Rockdale County since 2003. He was not getting a homestead exemption, nor was he getting the senior exemption. If my calculations are right, that's $15,000 for the homestead standard and $35,000 for the senior exemption. That's $50,000 a year that he had been missing out on, and that reduces his property tax. So with that said, I'm gonna make Will Director Barkley the host. Just give me a second. Okay, there you are.
All right, good afternoon, everyone. I'm Will Barkley. I'm the Executive Director and as well as the Chief Appraiser of the Board of Assessors. My primary responsibility is to value all property within Rockdale County at its fair market value and create a digest that is submitted to the school board as well as the county BOC so that they can create a millage rate for tax purposes. So it's important that we value all properties at its current fair market value and also recognize the exemptions that each individual is entitled to. So that's one of the things that we've always stressed is making sure that everybody get the exemption that they're certainly entitled to. So what I want to do tonight is go over some of the different exemptions that are available within our county as well as within the state. Some of the exemptions you will see will start with an L, and those exemptions are local exemptions. Sometimes those exemptions are very similar to state exemptions, which begins with an S. I'm going to give you a listing of all of those different exemptions, and we'll go through those. And I just try to give you some types of the qualifications that you have to meet in order to be eligible for those exemptions. Let's see here. I want to start.
Will, do I have to hit share screen or you can do it?
No, I'm getting ready to share.
Okay, thank you.
Okay. Can y'all see my screen?
I can.
Okay, this presentation is going to be over the homestead exemptions. The first thing I want to do, this is a document that we create each year based upon the current exemptions that the county is going to offer, as well as updates from the Georgia Department of Revenue as far as some of the state exemptions that someone may be eligible for. And I'm going to go through each of these exemptions and give you a understanding as far as what each exemption is, how do you have to go about qualifying for it, and what type of income restrictions some of those exemptions may have. And in the very end, I'm going to give you a total of how many current exemptions we have thus far, and just to give you a percentage of how many exemptions goes towards the regular exemption, how many goes towards the senior exemption, and so forth. The first exemption that we have is the regular exemption, which is the L1 exemption. What that does is that gives you an additional $15,000 off of your county M&O, as well as $15,000 off of your school M&O. And the M&O represents maintenance and operation. With all of these exemptions, once you qualify for the basic exemption, you are also entitled to the host exemption, which gives you an additional amount off of your county M&O. And that amount is going to change each year based on the previous year's sales tax for hosts. The next exemption, which is the L3, that is a low income exemption. It goes between the age of 62 to 65. Your net income for everyone within the household has to be no more than $10,000. And you get I guess the exemption for that one is $15,000 off the county, $15,000 off of the school, and an additional, an additional off the, I'm sorry, let me back up a little bit. An additional $10,000 off of the school bond. The next is the L6 exemption. And what that is that is the exemption for anyone over the age of 65 as of January 1st of that particular tax year. You get $15,000 off the county M&O, an additional $35,000 off the school M&O, and an additional $35,000 off of the school bond. The next exemption is a LD. This is a local exemption. This is for someone who's disabled. You must be permanently and totally disabled and be certified by a doctor stating that you are. The exemption is very similar to the L6 exemption. However, there's not a whole lot of difference as far as with those. I think the amounts are just the same. $35,000 for the school as well as the school bond. The next exemption, which is a S5, this is a disabled veteran exemption. This is a state exemption. And each year, if you look under the county M&O and also under the county bond, that's $101,754 for that particular exemption. That changes every year based upon the information that is provided to us from the Department of Revenue. That's established based upon Social Security and some other information from the state. So we don't necessarily decide what that number is going to be. We actually are given that number. So that's an exemption for someone who's a disabled veteran or someone who's unmarried and a surviving spouse of a disabled veteran. That is the S5.
Excuse me, Director Barkley, I have my hand raised.
Okay, sure.
If either you or Commissioner Washington can tell me, I can't see people trying to come in. I just got some messages, so how would I see those? And to admit them.
Commissioner Washington, can you see them?
I can't see them, but if you click on the participant list at the bottom, it should tell you how many people are in the waiting room.
Okay.
Give you an option to admit all of them.
Okay. All right. Thank you. I got it. Thank you.
Okay. All right.
Excuse me, I don't have an icon that show raise your hand.
Scroll down at the bottom of your screen. You see different, like you see participants, chat, share screen.
Right, but I don't see anything that, and that's participant chat, share screen, record, slow captions, reactions.
Yes, reactions.
Oh, okay. Well, I want to raise my hand.
Okay.
Sure, go right ahead. What's your question?
Okay, I have a couple of questions. So on the L6, where it's 65 and older, so you were saying that that's county, school, and school bond. So does that add up to like 70, 80, what? You add all three of those together and you should have subtracted from your fair market price?
No, the way this actually works is that you look at each individual line item, and that amount is subtracted from the assessed value for each one of those particular line items. For instance, if your assessed value was 50,000, and from the county that would get reduced down to 35, whereas for the school, because it's 35,000, the exempt amount would actually bring it down to a taxable amount of 15,000. So that particular number is reduced from the assessed value for each one of those individual millage rates. There's a millage rate for the county M&O, there's a millage rate for the school M&O, and also there's a millage rate for the bond for all of those as well. So each one of those are broken down based upon whatever that exempt amount, which creates a taxable amount.
So the exempt amount, is that start off by being the homestead amount?
No, it starts out being the taxable value, which let me back up and just to make sure, and I sort of moved ahead. Let me back up and just say, for instance, if your home was valued at $100,000, you're based in Georgia, you're taxed on 40% of your fair market value. So that brings your value to 40,000. That's your taxable value. So you don't pay taxes on the 40,000. You would pay taxes based upon whatever exemptions that you may qualify for. In this instance, with the L6, that 40,000 would get reduced by 15,000, which would give you 25,000. So the county M&O portion of that would be the 25,000 that you would pay taxes on, based on whatever their millage rate is.
Okay. Okay, I think I kind of got it. So from the fair market price, each one of these is really a different taxation.
Yes, each one of them have a different line item. You would see a different line item on your tax bill for each one of these items that are missing.
It's like going to 3 separate stores.
Yes.
And all 3 stores have a tax.
Yes.
I got
Absolutely.
it now. Okay, one last question. Under S5, when you say disabled veteran, is that 100% or is that dependent upon like a VA assessment of percentages, or what exactly? You know, there's all kinds of disabled vets. They got that percentage rate going by the VA. There's 100%, 30%. So does that play into that?
That's actually a very good question. Yes, it has to be 100% totally and permanently disabled. And also they term the word unemployable. If you have that listed as far as on the status of your VA letter, then you are entitled to this exemption as well.
Okay, and on LD, where it's disabled permanently certified by an MD, I have a neighbor who has cancer. What would she have to do? Would she have to bring in documentation to be, what would that be? She also would qualify for Homestead, but then would she be able to qualify for the disabled as well?
Right. If she's totally and permanently disabled and a doctor would sign off on that, we have to have a letter from that particular doctor, or they can have one of the forms that we have that state that they are totally and permanently disabled. Once the doctor signs that, then you would get the local exemption, which would be that 15,000 off of the county M&O, as well as the 35,000 off of the school M&O and bond.
Okay, and you can pick that form up at your office? Or?
Yes, we're located at 981 Millstead Avenue.
Okay, thank you.
There's a hand up for Connie and Diana.
Yes, I got a question.
Sure.
My husband is 100%. He's a disabled veteran. And we got a tax bill. So, and he went down there, but I want to hear from you because I work during the day. So I want to hear from you what the deal is, because we got a tax bill and he's 100% disabled veteran. And we supposed to have the homestead.
Okay. The question becomes, when did he become totally and permanently disabled?
He been totally disabled.
He provided a VA letter stating that he was totally and permanently disabled?
I'm pretty sure he did when he went down to the tax commissioner office.
Okay,
because we had to do that when we bought our house.
right. I would have to look at it individually just to see your particular case to see exactly where it is. But ideally, the way that it works is that once you have a letter from the VA, you actually submit that to the Board of Assessors, and myself and 2 other board members, we review all of those, and we'll make a recommendation based upon whether or not they qualify or meet the standards based upon what the state has said.
Okay, all right.
Yeah. So if you didn't, you should have received a letter. If you were denied, you would have had to receive a letter stating that you were actually denied.
No, I haven't received no letter. So what I want to know is that, because I haven't went down there personally to talk to you or Tisa about this. So that's what I'm going to do, because I work during the day. So I haven't been down there, but he is totally disabled. He's 100% from the VA and unemployable.
Okay. As long as you have that documentation from the VA, then usually that's all that we require. If they currently have Homestead and you have that letter from the VA, then you're entitled to the exemption.
Okay. All right then.
Yeah.
Okay. Do I need to make an appointment with you?
I'm in and out quite a bit.
Okay.
Ideally, it would probably be better to catch me if you want to catch me in the office, but normally I'm not the individual who actually takes the application. I do have staff that actually are trained to be able to do that. So just
all right.
at any point, you can definitely reach me to say, hey, look, I came in and I need some type of resolution. So feel free to do that.
Okay, I will. I got your card. Okay.
Yeah.
All right. Thanks.
All right. I think there was Miss Connie. There was a question from Connie.
Yes, Connie Lassenby.
She needs to unmute.
No, I was trying to learn how to run this thing. Thank you.
If you go back down to the bottom, it'll say lower hand. But I do have a question, Director Barkley.
Sure.
If you can also go over how they can look up their tax bill online themselves.
Well, Ms. Turner, I'm not going to be the person who go over that. That's going to be, I'm not going to steal Commissioner Washington's thunder. She probably will go over the tax bill stuff and explain that.
All right, thank you.
However, this information that I'm sharing with you, as far as your exemption, it should be online as well, and it'll be on your tax bill. Okay. I think we have made it to exemption, the S5.
I have a question.
Sure, go ahead.
The school bond, I don't recall seeing that on my tax bill. Can you explain that to me?
Now, if the school had an active bond, I know the county does not have a bond as of right now, so you will not see an exemption for the county portion of that. If the school had a bond that they were including, then you would be entitled to the exemption off of the school bond as well.
Okay, that's what I thought. I just wanted to clarify that. Thank you.
Yeah, currently, I don't think they have one. All right. Any other questions? All right, we'll move on. The next thing is the SD exemption. And now this is a disabled veteran exemption as well. This is for someone who's over the age of 65. That exemption is not that much different from the previous exemption. However, there may be some additional exemptions that may fall into the city. I don't have the city documentation currently right now, so I can't share that with you. But if you look at the SD, the SS, and the SE exemptions, all of those are the same amount, which is based upon an amount that is given to us each year by the Georgia Department of Revenue. Now, the SG exemption is a total exemption. It exempts you from taxes all the way across. However, it does not apply towards any fees. So you would have to, if there's a stormwater fee or if there's a street light fee, you're not entitled to that exemption for the SG. Ms. Turner.
Yes, can you make me host again? There's participants trying to get in, and I did click on participants, and I'm not seeing any there, but someone just sent me a message that there's a homeowners association trying to get in, so I can't.
I don't
Guess
see
I would have to
anybody
be
up
the
there.
host to see them. Did you give it back to me?
1 second. Let's see.
Who is Bay and Julie Hall? That's who's messaging me.
Hey, Corliss,
Yes.
it looks like they're in there now, so I think we're good. And you
Okay.
shouldn't have to be a host to let people in, so I think you're okay.
Okay, I went down to participants and I didn't see anyone waiting. Okay, Will, I'm gonna hand it back, Director Broccoli. I'm sorry.
That's okay. I saw someone in there. I allowed them to come in, so and it was
Oh.
telling me that nobody was asking to come in.
So then the
We'll move
host
on.
can do that. All right, now, you're still host then?
Yes.
Okay, all right, thank you. I apologize, everyone.
Okay, no problem. Okay, the next exemption that we have are going to be several exemptions that are state exemptions. We don't have many of those exemptions within the county because some of these exemptions are what you have to do is in order to take these exemptions.
I know what's going on.
Okay, somebody needs to mute with that.
Yeah. Some of these exemptions are in place of the regular exemptions. And if you choose these exemptions, sometimes they're not to your advantage to have that particular exemption compared to the regular exemption or a senior exemption. So that's why you see some of these are variable. And what happens with these is that these exemptions are sometimes subject to just the improvement and also 5 acres of the land. And these are state exemptions. And this is the L6, I'm sorry, the S6, the S8, and the S9. And they do have income restrictions as far as not having your adjusted gross income for the entire household be more than 30,000 or the net income being more than 10,000. And sometimes it's both based upon whatever the exemption are. And these are state exemptions. We don't have anyone who qualifies for these particular exemptions in Rockdale right now, but I'm going to give you a breakdown as far as what those look like as we move forward. Now, this is just a little bit more detailed as far
I'm
as,
sorry, we don't see your screen. I'm sorry, that's why my hand was up. Are you sharing your screen?
I was.
Okay,
They
don't.
take it away?
Yes.
You took it away, Ms. Turner?
No, I didn't take it away. I'm not the host.
Let's see.
Commissioner Washington?
Is it back now?
Yes.
Yes, okay.
Okay. Sorry about that. The L1 exemptions, what I discussed earlier, and I've broken it down just to give you guys an idea, just to hit some highlight points as far as what's related with the L1, which is the regular exemption. There's no age or income limit. This is for all property owners who occupy the property as of January 1st of the application year. This includes the $15,000 off of the assessed value for the county M&O as well as the school M&O. What I don't have listed up here is also the host exemption. You're entitled to the host exemption for any of these exemptions that I'm talking about today. So you still would qualify for that as well. The L3 was the low income exemption. There's an age requirement for this one. This is someone who's 62 years or older as of January 1st. The income requirement is the claimant and the spouse income cannot exceed $10,000. This is after the deductions for based on the line 15C of your Georgia tax return. So what it does also give you is $15,000 off of the assessed value for the county, as well as $15,000 off of the school and $10,000 off of the school bond. That is the L3. The L4 is very similar to that. However, it's for someone 65 years old or older, but you cannot have a growth, I guess a net income over 10,000, very similar to the L3. You get a bigger reduction based on the county bond and also the school and the school bond, 35,000 off each of those. The L6 is the one we talked about earlier, which is the L65 and over. You have to be at least 65 on January 1st of the application year. This gives you $10,000 off of your assessed value for the county, as well as $35,000 off of the school and the school bond. The LD is the one that Ms. Collins had mentioned. This is one of the disabled exemption. This is not the veteran exemption, but this is one that for just any person who may be 100% totally and permanently disabled. You get $15,000 off of the assessed value, as well as $35,000 off of the school and the school bond. The S5 is a disabled veteran exemption. I do have a hand, sorry.
That exemption, the one that you just said, if you're 100% disabled, you don't
Yes.
have to be 65 as well, correct?
No, there on the LD, there's no age or income limit.
Long as you're disabled and the doctor fills out the form.
Long as you're 100% disabled, you're totally and permanently disabled, and the doctor fill the form out.
You'll
You're
get
entitled.
the same exemption as a senior.
Yes, it is.
Oh. Thank you.
You're welcome. All right, the S5 is the disabled veteran exemption. There is no age or income limit for this one as well. It requires a letter from the VA's office stating that you're 100% disabled. This is also extended to an unmarried spouse or amount of kids, provided they claim the homestead in the same county. This includes an annual adjusted amount, which was at 101,000 that I mentioned to you guys before. That amount changes every year. The SD, this is a disabled veteran. This is someone who's the age requirement, you must be over 65. It's very similar to the previous exemption, which is the S5, but this one is someone over 65. That's the difference in those two. We have the SS, which is a surviving spouse of a disabled veteran. There is no age or income limit. It requires a letter from the U.S. Secretary of Defense stating that his unmarried spouse receives benefits as the result of a death of a spouse who was killed or died while on active duty. This includes the annual adjusted amount off of the assessed value from the county bond, the school, and the school bond. Question, Ms. Turner.
That surviving spouse,
Yes.
that means that the veteran has passed away. Did that veteran have to be disabled when he passed away, or do they have to be 65, or just the fact that it can be any age, long as they're deceased and the spouse could get the exemption?
Yeah, this particular exemption is mainly centered around if a veteran died in the line of duty or active duty, the spouse is entitled to this exemption. It does not have an age or income requirement or limit based upon that.
Okay, thank you.
There's a senior surviving military spouse, and this is for one who's over the age of 65. They have to be unmarried. There's no income limit as far as with that, but they have to have been killed in action, requires a letter from the U.S. Secretary of Defense. And this amount is adjusted annually based upon numbers that are submitted to us from the state. And there's a SG, which is a spouse of a peace officer or a firefighter killed in the line of duty. There's no age or income limit. This also applies to someone who's unremarried, and this individual was killed in the line of duty. We require a copy of the descendant's obituary stating that they were deceased, and this is 100% exemption for all taxes, county, city, and school. Does not exempt applicant from fees, stormwater, street lights, or sanitation. This is the one I mentioned to you earlier, as far as it exempts everything 100%, but it does not exempt those fees. We have a total of around close to 20,000 homestead exemptions within the county. There is the regular exemption, which is the L1. There's about 12,000 of those. There's 7 of the L3 exemption, which is the low income, and there's 168 of the low income over the age of 65. The L6, which is the over 65 exemption, the standard one, there's about 5,400 of those. And this was just to give you a breakdown of where all of the exemptions were, I guess, based upon the applicants that we have in the county. Ms. Turner, question.
Yes, the first one, the L1, that's the standard homestead exemption.
Yes.
And you only have 12,460.
Right.
Do you know how many property owners there are in Rockdale County?
There is 35,000 parcels in the county currently right now, a little bit more than 35,000. That includes commercial, industrial, and residential. I don't have a breakdown of how many of those are strictly residential, but that's pretty much a third of the properties in the county that are still, that has the L1 exemption.
So that means that there's a lot of citizens that don't even have homestead that qualify for it.
No, I don't think you can look at that and say that. I don't think that it says that. I think based upon, you got to also take in consideration, there are a lot of apartments, there are a lot of rental properties. So you have a lot of those individuals do not qualify for homestead.
Okay. In this 12,460, does that include business as well?
No, businesses do not qualify for a homestead exemption. These are residents and these are residential properties
Okay, all
only.
right, thank you.
And just if you disagree with any the values that the Board of Assessors provides you, there's a mechanism to challenge those values. I did want to point that out as well. You can appeal to the Board of Assessors. You either can have your appeal heard through the Board of Equalization, a hearing officer, or arbitration. And if you disagree with any of those findings, you can actually go to Superior Court and have your case heard before a Superior Court judge. Any additional questions? I think Tammy has a question. Please go ahead.
Yes, on the first one for the homestead exemption, it only applies to single family residential, correct? It does not apply to multifamily or townhouses that are rented?
No, it does not apply to any properties that are rented. You have to own and occupy the property as your primary residence.
Okay, would it apply to a townhouse?
Yes, a townhouse still would qualify based on the fact that it is your primary residence, and it is you would do a normal deed in order to purchase that property, so it still would qualify for this particular exemption.
Okay, so how do you guys track if someone moves out and rents their house, but they qualify for the homestead a year ago?
Well, with some of those, what we do is that we get notifications from the water department as there's going to be a change as far as in the ownership of the property is being rented, or there's a lease agreement. Once we get that notification, or if there's a change of an address, we usually take the homesteads off, send a letter out, and ask that they reapply if they're still there, or show us some information to prove that they're still there.
Okay, thank you.
Any other questions for me, Ms. Samuels?
Yes, so kind of, I'm trying to track on hers. So if you have someone that has a residential property, but then, and they have homestead, but then they rent that property out, are they supposed to report that to you, or they continue to pay their property taxes though it's their primary residence?
What they are required to, if there's a change as far as in the ownership of the property, or I guess if they're no longer going to utilize it as their primary residence, they're required to notify us. However, sometimes we do get the information from the water department that there's a lease or something of that nature that has changed. Currently, what we're doing, we're going to partner with one of the vendors that we currently are using for some of our website hosting, and as well as some of our auditing. We're going to start reviewing just to make sure that there are not any outstanding homestead exemptions where individuals may have an exemption that they do not qualify for if they had it in another community, or if there were multiple locations within the county.
Okay, so how would you check that if they moved to a different county, but they are renting out the property in this county? So you wouldn't know
Once
that
they
they have
apply for the
multiple.
exemption in the other county, then we're notified that they're applied for an exemption in the other county. And technically, the way that we try to do things is that we require that you actually have a current driver's license, a current utility bill, or your voter registration. We review those things just to make certain that you do reside at the property that you say that you reside in. And the other counties do the same thing.
Well, that's when they're applying, but if they already applied and had it a long time and then moved out and rented it out, I'm actually watching one of those happen. That was one thing. The other is, so when the city or the Board of Commissioners allow a lot of apartments to be built, how does that impact property tax and the monies for the county or whatever? Who pays property taxes then for those apartments? Since you said it's only in ownership really that the homeowners are getting exemptions and paying the taxes, right?
Right.
So
When I
who's
look at
paying
that-
taxes for those apartment buildings?
Well, the owner of the apartment buildings are actually paying taxes based on that. However, if you look at it from the perspective that when you're dealing with the homes, even though we're getting some of the taxes from a county perspective, we're getting taxes from the homeowners. From the businesses, we're probably getting more taxes because they're not entitled to any exemptions. So they have to pay the full amount on all of those apartments. If there was a 400 unit apartment, all of that is taxable based upon whatever the cost or whatever the income producing mechanism as far as what the valuation of that is.
That is, unless there's some kind of deal for them to bring the business here and then taxes get negotiated sometimes?
Usually not with any apartments. Very rarely would you ever have a situation where you're going to do what they call some type of incentive or an abatement for an apartment complex, because that's not something that you strive to do from a county's perspective or a city's perspective in order to bring one of those units into your community. So that's not something that they offer.
Okay, would you be the person sitting in on something like that, or when they do have, whether it's apartments or it's businesses or whatever, or is that a different department?
No, I'm actually one of the individuals who actually sit at the table when there are any deals or anything of that nature as far as a business coming into the community. We do have a stake as far as in what type of incentive we're willing to offer based upon what is impact it's going to have on the overall digest.
Okay, good to know.
All right, Ms. Turner, I think you're next.
Yes, there's a question in the chat. Tony Berry, he wants to know where do you take the documents in order to receive the exemptions?
The documents would actually come to the Board of Assessors office, 981 Millstead Avenue.
I'll put that in the chat.
Got a
Thank
question from Tammy.
Sorry, I'm gonna piggyback again. On the homestead, let's say I bought my home and then I move, but I leave my mother here. Can she still get the homestead if she's not on the deed?
If she's not on the deed, she's not entitled to the homestead. If the property is in your name and is titled to you, and you state that you're the individual, this is your primary residence, this is where your driver's license, this is where your voter registration is, then the homestead should be with you. Now, your mother doesn't qualify for it. However, there are cases where you can actually, what do you call it? A deed of gift, or you can do a life estate, better yet. Do a life estate, and the life estate can give her, if she lives here and this is her property and this is her primary residence, then she may be entitled to the homestead based upon the life estate.
Okay, last question. What documents do you require to prove proof of homestead?
We require that you have a current ID with the property address on it, a current utility bill with the property address on it. We require that we look at your vehicle registration and also your driver's license.
Okay, thank you.
I think there was a question from Monica.
I'm sorry. Yes, my question is, why do we have, I don't know if anybody asked this, but why do we have city and county taxes? Like I never heard of that. Is every county like that, or it's just Rockdale?
No, that's actually every county. If you reside within the city limits of that particular county, then you're subject to county and city taxes based upon the services that the city will provide for you.
Okay. Thank you.
You are. All right. Any other questions?
Yeah, I wasn't tracking on that. So what services does the city of Conyers provide for the county of Conyers? Because we don't get, we have separate sheriff, we have, we pay for our own trash collection.
Well, when you reside within the city limits, they have their own services that they provide. I know they do have their own sanitation that is part of that as well. Whenever you're within the city limits of any particular area, you pay for the services that they provide as well as for the county.
But if you're not within the city limits, you're only within the county.
You do not pay for any city taxes.
Okay, I think that was, okay, that's what was confusing me. I thought it was said you paid for both.
No,
Even though
only if
you
you
lived in the
reside within
county.
the city limits. If you don't
Okay.
reside in the city limits, you do not pay any city taxes.
Okay, that's where I got confused. Thank you.
No problem. Okay, any other questions?
You okay?
Oh, yeah, I just tripped. It wasn't a problem.
All right, Latasha, there's a question from you.
Yeah, so my question is, Rockdale County, from what we've been told, is within the city limits. So we're paying both Rockdale County and City of Conyers taxes.
Okay, Rockdale County, well, you have the county, you have Rockdale County. The city of Conyers sits in Rockdale County. So only the incorporated portion of the city of Conyers, you would pay taxes if you reside within the city limits. If you're not in the city limits, you do not pay city taxes. You would only pay county taxes.
So there's portions of Rockdale County that lies outside of the City of Conyers?
Absolutely, yes.
Director Barkley, do you see anyone trying to come in?
And while you're doing that, Director Barkley, I'll give a little more clarity on the city county issue. If you receive one tax bill, then you live in, even though everything in Rockdale is Conyers, in terms of the post office, if you receive one tax bill, then you live in unincorporated Rockdale. If you receive two tax bills, so you get a tax bill from me, and then you get a separate tax bill from the city, then you live in the incorporated part of this, you live in the City of Conyers. And a lot of people who move to our community that live in the city don't realize that there are two separate tax bills. And sometimes they'll pay one and not the other. They'll pay me and they won't pay the city, or they'll pay the city and they won't pay me. But if you only receive one tax bill, then you know that you live in unincorporated Rockdale, where you only get a county. You only live in, you live in the county. You don't actually live in the City of Conyers.
One thing, Ms. Tia, just to add to my question, and I know this has happened to a lot of people in my particular subdivision, we weren't aware until those bills came out. So it was, we received one, oh, okay, escrow paid it, here's another one. Where did this come from?
I was actually in the same situation when I moved to Rockdale in 2002. I lived in the city, and my escrow paid the city tax and did not pay the county tax. And I didn't know until the tax commissioner's office actually issued a FIFA. They wanted to take my property to tax sale because I had not paid the county taxes. And that's how I found out that there were two separate bills. So, you know, sometimes the closing attorneys are not aware, and they don't take that into account. But it is a gap it's kind of a knowledge gap that is out there. If you're not familiar with Conyers, a lot of times you'll fall into that category. And because of that, in my office, if we realize that you've been paying the county tax and not the city tax and not the county tax, then we'll take off the penalties or interest, and we'll work with you to get that bill paid, so that moving forward, you know, everything is taken care of in a timely manner.
I just want to share this, Commissioner Washington and Director Barkley. We were recording and the recording stopped. And when I try to press it, it says, ask the host to give you permission to record. We were trying to record this so we can share it. So I guess if I'm not the host, I can't record. So I'm sorry, everyone.
Will is the host.
Yeah,
Unhost myself.
okay. Well, we won't have it recorded. Because neither one of you, can you record, Will, Director Barkley?
I'm not seeing an option for me to record.
Okay.
I'm gonna stop sharing.
Yeah, I was recording prior to you becoming host. Now it's saying you need to give me permission, and I don't know how you do that. Neither one of you are recording.
No, I'm
I'm the
not.
host.
Okay.
I see something in my upper left corner. It says REC and the
It says recording.
flashing.
Still saying recording. That's what it's
Okay.
saying on mine.
Yeah, that's what it's saying on mine.
Yeah, I think
Yeah.
it's recording.
Okay, because he's the host is still recording, it's just not allowing me. Okay, that's great. Thank you.
Okay.
No, it should be, everybody should still be seeing it. It says record. It's still recording.
Right, I see it.
Okay, how do I relinquish this from?
Are you through?
I'm confused.
Okay,
Are
sure.
we recording? Because I see a yellow exclamation and that wasn't there before.
Yes, we're recording. When he became host, it took recording away from me, but he's
Okay,
still recording.
so where did the yellow exclamation, I mean, the symbol with the exclamation in
Well,
came in?
if you
'Cause
hover
that
over
was-
this meeting information.
No, that wasn't there before. Okay.
Was that all the questions that you have for me? Monica, do you have another question? I see your hand up.
I do. I have one more question. So I know you came on and we thank you for coming on and you told us about the exemptions, which sounds like it caters more to elderly and veterans. So is it anything you guys can do to adjust these bills? Because it's really high. And I'm looking at people like who stays in like Gwinnett County, their taxes is just as much as ours and their school system is better. It's just a different situation for them. And Conyers is nice, don't get me wrong, but I'm not understanding why it's so high. That's my question.
I'm a pivot and pass that on to Commissioner Washington.
Can I say something right quick? I think she started out and said something about, can you reduce the taxes? Is that correct? Was it Monica?
Yes.
And I think she might be talking about the appeal.
If she's talking about the value, yeah, there's a way to reduce the value. The first question I asked, do you have a homestead exemption, Monica?
I do. That was the first thing I did. I thought I was doing something when I did that, but that's the first thing I did. And it's still really high. And I'm, like I said, I have family members who live in different counties who a little bit more upscale established. I love Conyers. I've been here a long time, not to put it down, but I'm just not understanding why it's just as high as theirs.
Right.
We're really paying a lot.
Yeah, normally what I would see is that when the values are very similar from one county to the next county, and we look a lot at Gwinnett, and we look also at Newton County. Usually if the values are very similar, because we have the host, you normally will have a less amount that you pay from a taxable standpoint compared to those other communities. However, depending upon the value of your home and what type of exemption you have, then that would determine how much you're paying as far as in taxes. Now, one of the things you can do, if you think that your value of your home, you disagree with that, you do have an opportunity once we send you a notice of assessment to challenge that, because there could possibly be some information that could be incorrect as far as in, some of the specifics about your home. If we have you listed as having 5 baths and you only have 3, that can impact your value. And we need to make sure that we get that correct. But you challenge that during the time that we send you the notice, telling you what our valuation is. And then you can go through that process.
Will, Director Barkley, can you please tell them what, when that notice is and the deadline?
Yeah, normally we're going to send a notice out the last week of April. Over the past several years, that's the time that we send it out. You have 45 days from that particular date in order to challenge the value. Be sure to read the notice. It's going to specify on there, this is not a tax bill, but it's going to give you information about your homestead exemption. And also it's going to give you information about what your taxable exposure may be for that particular year coming up. So if you disagree with any of that, don't hesitate to file an appeal or call our office just to get clarity as far as in what this notice of assessment is all about. Ms. Samuels, I think you had another question?
Yes. So what does that re-evaluation look like? Is that like when you refinance your house and somebody comes in and does the whole walkthrough type thing? I mean, when you do the appeal, are you supposed to hire what does that look like?
Okay. Initially, the way things start out, each year, the Board of Assessors are charged with being able to value all of the property in the county. And the state of Georgia reviews all of that information every year just to make certain that we are valuing properties at its current fair market value. So once you challenge that or you disagree with that, what that does is that requires that one of the Board of Assessors members to come out, review your property to make sure that the information that we have in our system is correct. You may know something about your property that we were not aware of. You can bring that to our attention. We will make an adjustment if we see, I guess, we deem that the information that you provided is valid. If we don't make an adjustment, we'll notify you that we're not going to make a change, and then you can go to the Board of Equalization and file an appeal, and you could challenge that particular value. So that's the process that you would go through if you disagree with our value.
Okay.
All right. I think there are two more hands up. Latasha?
So my question is, and I'm kind of with the lady earlier as far as comparative counties. We are recently from Gwinnett County, and I know firsthand that our taxes are higher. And my concern is I'm not seeing where this is going. Like I'm hearing that we can appeal. There's people in our community that have appealed because it's a brand new build and they got denied. We've been vastly underestimated and get these bills where we've been paying into the tax, and now all of a sudden you got like 30 days to pull a ridiculous amount out of your back pocket. And so the question that a lot of people that are saying in our community is, where's all this going?
Can I speak to that?
Sure, go ahead.
I think, hi, I'm the tax commissioner. I'm Tisa Smart Washington. There are two portions or two components that determine what tax you eventually end up paying. You know, one part of that is the valuation on the property values, and then the other part of that is the millage rate. And a lot of times the millage rate is not decided until the summer. So after the valuations go out, then that's when either the Board of Commissioners, the school board, or the city of Conyers, maybe all three, depending on where you live, they decide on their millage rates. That is going to be one of the drivers for that tax that you end up paying. And so, you know, a lot of times people will ask us, well, where does my money going to? That's really a question for either the Board of Commissioners, the city council, or the school board. So I try not to answer for the decisions that they make, and I hope that they don't answer to the decisions that are made in my office either, because there's a lot of rationale around how they determine which that final number, how they determine what that final millage rate is going to be. And it really does, those two things drives that tax that you end up paying.
So the appeal process is basically going to defend devaluing my home to make the taxes go down.
No. Part of the first thing you have to look at when you start talking about the value, we all know that the market has been in an upward trend for the last 2 years. It's been trending upward. Properties have been selling for more than the list price. So the valuation of those, if you are able to sell, you are able to get a windfall. But if you're not selling, that has an effect on everybody else when the valuations are up. So we are still required by the state to be able to value properties at their fair market value. When they're investment sales and when they're just bona fide sales between individuals where someone decides to sell their home and someone else comes in and they're willing to pay $50,000 to $75,000 more than what it listed for, I still have to value properties based on what the actual transaction amount was. That's the actual sale price. Some people say those numbers are fake numbers, but that's actually what the money was that exchanged hand. So we have to look at that as far as in determining the value. So if you disagree with the valuation, then you still have a mechanism that you can actually challenge that. But I think the point that you're making is that you don't agree or you don't understand what the county and the city and the school is actually doing with the monies that they are collecting. And that's not an answer or a question that tax commissioner or myself would be able to answer those questions, because that's not anything that we decide on. We actually, my responsibility stops at the valuation. Her responsibility starts as far as with taking the information from the school board as well as the county and the city and creating a tax bill from the information that they've come up with. She has no bearing whatsoever on the amount. And the only part that I have a bearing on is the actual value. So if I don't value it at its current fair market value, then the state comes in and say, we're valuing lower than what the market is dictating. So that's the challenge.
And let me add one more thing that we usually see in my office when it comes to new builds. People don't realize, depending on when you purchase that property, the tax bill that you receive may only be based on the land, may be based on there not being so a lot of times what a lender will do is that they'll pull the last year's tax bill. Well, the last year's tax bill may have been only for land. So when you purchase the property and now it has a house and land on it, it's going to be a totally different value and it's going to be a higher value. And sometimes people are not ready or not prepared to pay that tax bill because what they were qualified on was just a tax bill that only taxed the land. And now what they're receiving a tax bill for in that current year is that land plus the house. So that's why one of the things that we've tried to do in this office is make sure that we're providing as much information as possible to closing attorneys and to real estate agents, so that when they are showing houses, when they're selling houses, when they're completing these transactions, that they're giving the new homeowner all of the accurate information and not just what can, kind of get you over the finish line, but not really help you move towards it. I say this a lot. I say that a lot of times we talk about home ownership, and really what the information that we're sharing is just about being a home buyer. And people aren't sharing information about being a home owner and what that entails. So, if it's a lot higher than what you expected it to be, go back to your closing papers and see what they base that tax bill on. Sometimes it's just the land and not the land with the house on it.
I think there are two more hands up. Actually, there are three.
Catherine Lynn, did you have a question?
Hi, yes. So my question is this, okay, my neighborhood, a lot of people in my neighborhood saw value increases of about 71% this year because of this inflated housing market. It's already starting to cool, and a correction is going to happen at some point because of the interest rates changing and this whole thing dying out. So my question is this: what happens when the real estate market goes cold and these houses are no longer selling for these amounts anymore? Do you come out and reassess those properties? Because if we start seeing houses that were during this crazy time selling for $240 and all of a sudden they're selling for $120, how do the rest of us get impacted by that? When do you make your own correction on values?
Each year, we're required to review the sales that occurred the previous year. And the value that you see on January 1st is the valuation based upon sales that occurred that previous year. Now, let me also highlight just the fact that we're required to follow whatever the market is doing, whether the market is trending upward or downward. So we have to make the adjustment accordingly. If you remember back in the year of 2008, 2009, when we had the great downward turn in the market, and even prior to that, we never really considered foreclosures as part of fair market sales. We had to start incorporating foreclosures as part of the real property sales, as far as that's what the market was dictating. So they flooded the market with those. So we had to include those as well. So whatever the market is doing, we're required to follow that. So if it's trending downward, we'll follow it downward. It's usually the problem with that, you know, to the point that you're making, the problem with that is that it's a slow trend to catch up with once it starts moving downward. So it's already a year and a half or 2 years into the downward turn before you would see the adjustment as a homeowner.
Okay, Phyllis Samuels, you have a question?
Yes. And this has to do with the valuation also. I understand you have to base the property value on fair market. However, could you tell me if there's any type of legislation or anything going on? Because it really is not a fair market, because as you have pointed out yourself, people are coming in and they are inflating our property to the point that we can't afford them. For example, so many of these corporations are coming in offering cash to buy these houses, turn them into rental properties, really, and driving, as you say, paying more than what's the asking. They'll call you up and say, we'll give you cash on the spot. We get so many calls for them to buy our houses. It's crazy. So the market really is not fair. It's being unfairly inflated by corporations. Are you aware of any type of legislation, anything that's going on to make it a little bit more fair to homeowners? Because it is not a fair market price. Not now, not with the people who are actually buying the houses. I'm sorry. Oh, did you hear me?
Yes, I did. I heard you. I guess my rebuttal to that was I would differ with you as far as whether or not it's a fair market. I think that it is a fair market sale because we have to look at it both ways. When they were selling for foreclosed prices, that was still a fair market sale. We had to consider those, even though they were very, very low. And, you know, if you think back when the real estate market was at a point where it had crashed, people were able to buy a lot of properties for less than $100,000. That still was a fair market sale. That's just what the market was dictating. So that doesn't change the way the overall make of how the appraisal process works. You just have to understand that during that time, things are going to sell for a lot less. And then at this particular moment, things are selling for a lot more. We don't know if they're going to maintain that level of, I guess, value over the next 5 to 6 years. But it's kind of, I guess, the way that we look at it is that once you hit that particular point where they're selling for a price that high, they usually are not going to deviate and go down that much over a short period of time. So we're not seeing that based upon the sales that we're currently seeing at the end of 2022 compared to what they were doing at the beginning of 2022.
I understand about the fair market. My question was, are you aware of any legislation going forward, not because of the inflated price or but because of who the buyers are now? That was really my question. Okay. It's a different playing field now. It's not so much, you know, the first time homeowners or homeowner buyers, it's corporations. That's what my question was. Are you aware of any talk, legislation? Because that people, you know, people in government have talked about the fact that corporations are coming in and making the purchases versus, you know, single homeowner type people.
Right. And you may see some of that, but I haven't heard of any legislation or anything. The thing that I guess that comes to mind for me is that you can't go in and say, you can tell anybody who they're gonna sell to, or who can buy this or who can't buy this. Because once you start looking at real estate from that perspective, this is part of the whole capitalist way of doing things, as far as based upon you're able to sell something for more than you originally paid for it so that you can receive a profit. So I don't see legislation to say that investment properties can't be purchased by an investor. I just don't see how that will work.
And I'm not aware of, I'm not aware of any legislation, but what I've seen, especially local governments do, is that they try to put incentives in place.
Exactly.
To make it attractive for people to be homeowners, which is the reason that we have things like the homestead exemptions, and you only qualify for them because you own and live in the property. The host exemptions, you know, a couple of years ago in DeKalb, they provided grants where if you were a homeowner and you lived in the property, then they would give you down payment assistance and that sort of thing, and you didn't have to repay the loans. So we usually don't see legislation that will restrict people from buying as much as you see programs that will encourage homeowners or home ownership instead of corporations or, you know, companies being able to buy in your community.
I understand what you're saying. I think they just did one of those programs in Fulton County or DeKalb where they're giving 50,000 down payments to homeowners. So then your property taxes aren't going sky high because people are willing to pay over the cost. Hey, Rockdale, y'all gonna do anything?
Hope so.
I believe Darlene has a question.
I did, and I think Catherine and Phyllis asked the question, but my question is do you only do the valuation based on the number of sales, past year sales? You don't look at anything else? I'm just not understanding why they don't look at the house, whether you add additions or you made changes. Do you look at that as well?
Oh, absolutely. We look at that as well. Any type of permit that you take on the property, once you take out a permit, then we'll notify that you're adding a pool. If you're adding an addition where you're finishing your basement, once those permits are submitted, we get that information as well. So we're going to come out and review to see what you're adding to the property, because all of this is based upon value of the property. So if you add any value to the property, that changes what it's worth. So if you could sell it for more, then it's going to be more taxable.
But what if you can't sell it for more?
Well, I would beg to differ based on if you add an addition, because the theory of adding value based upon you adding additional rooms, that usually adds value to the property. Usually, if you add something, it doesn't devalue your property.
Yeah, I understand that, but I do know sometimes the price of a home goes down. I mean, you guys are basing it on what happened last year, but this year everything may crash. What happens then?
Well, as I stated earlier, we follow whatever the market is dictating. I indicated that if there's a downward turn in the market, we follow what those sales are doing, and we go and readjust our valuation based upon those sales prices going downward.
So you're saying since the past 20 years I've lived in this home, everything just kept going up?
Were you in the home in 2009 and 2008?
I was in the home in 1997. Yeah, since 1997.
I would beg to see that your value did not change in those years and always went up, because there was a crash.
Oh, it did go up, trust me.
Did it not go down?
I don't remember it going up, down at all, no.
Well, I will research it for you, and I will send you some information to show you probably what the value did during that time. Because all of the property, one of the things that we looked at when we do the digest each year, just over the past couple of years, our digest had fallen off so far based upon the crash that occurred back in 2008 and 2009. We just finally recovered to get back to that particular point. Prior to that, we were lower than what we were in 2008. So I would be hard pressed to, I guess, to find that your value did not go down during that time.
I can look at it.
Okay.
All right. Thank you.
No problem.
Okay, I'm gonna ask a question. the properties that they put up for tax sales, that residents lose their home because of tax sales, who's paying the taxes on that, or are they frozen? The houses that's been taken for tax, but not paying their property tax. Is
Okay.
it,
I'm sorry, go ahead.
I was gonna say, is their taxes still being collected? Is the county collecting those taxes, or are they still being taxed?
Yeah, so when a property is purchased at tax sale, actually, when at tax sale, you're not actually buying the property. You're buying a tax certificate, which just gives you the right to foreclose on that property at a later date. During that time, the individual that bought the property at tax sale is paying the taxes. So they will, so what they pay at tax sale will pay all of the back taxes on that property. And then they are responsible for paying the taxes moving forward until a decision is made with that property.
And what about the property that doesn't, and no one buys for the tax, during the tax sale?
Then that goes unpaid. And then we try to collect other ways.
Okay.
Yeah.
So that's lost revenue.
Yes. And we do have a good number of properties that are in that category where they were undesirable for whatever reason. Maybe they were, there are some properties that have so much penalties and interest that the amount of penalty and interest is more than what the property is worth. So people aren't willing to purchase those properties. We have some that are maybe only desirable to the neighbors because it's a little piece of property that if you live right next to it, you might want to buy it so that it can increase your acreage, or increase the amount of land that you have, but it's not really desirable to anybody else. That has been the how it has been in the past. During this market, where people are willing to buy just about anything, then we're seeing properties go at tax sale that had been to tax sale several times before, that people are willing to buy now. So, you know, there are other tax commissioners' offices that will sell those uncollectibles to companies so that they may be able to collect a fee from that, or they don't want to be bothered with doing a lot of the follow-up work. I don't sell delinquent properties, so we just try to collect the best that we can, and those that we can't, we just keep trying.
Okay. All right, Rebecca Huntsinger has a question. Rebecca? Okay, then we'll go to Catherine Land.
Oh, excuse me. Can you hear me now?
Oh.
This is Rebecca. Can you hear me now?
Yes.
I have a comment to make regarding the housing that happened in 2008 and 2009. I have been a homeowner since 1973 in Rockdale County. So when I got my tax assessment for one of those years, and I don't remember which one it was, I went to the tax assessor's office to ask why the value of my home had not gone down, but just a few dollars. And I was told at that time that it was based on foreclosures, but it was only based on foreclosures that were made in your community. So does that stand true if that should happen again?
It's not necessarily in your community, just in your particular neighborhood. We do look at what's actually occurring within Rockdale County. Now, we don't go outside the county to look to see what the market is dictating outside the county to adjust the values within the county. All of the values that are going to be adjusted will be adjusted based upon what's actually is transpiring within the county.
Okay, but what area, how far out your area in where you live? Like I live in the city limits. So what would be considered outside my territory?
Ideally, each particular neighborhood has, we group we group a subdivision within a neighborhood. So what we do is what we call mass appraisal. And we don't do fee appraisal based upon what a bank may do when you have someone to come out, they're going to do an appraisal based upon a value that they need to get to. So they have the latitude to be able to go all over the county and sometimes outside of the county to be able to come up with some comps that are going to be similar to the subject property in order to establish a value. However, based upon for tax purposes, we do mass appraisal, meaning that we evaluate an entire neighborhood all at once based upon the sales that are occurring. Once we gather that information, we make adjustments based upon size, basement, materials, as far as whether it's brick, where it has amenities that are added on the inside, where there's upscale floors and those things. We make adjustments based upon that in order to try to establish what fair market value is. For instance, in your particular neighborhood, if there was a lot of foreclosures in there, then we would look at that particular neighborhood and make adjustments accordingly. So yes, we do that.
Okay, so if that should come again, which we are expecting, whether it be this year, next year, or whatever, could you tell me when I come up there and give you my address, what my neighborhood is, what's considered? Because we don't have a lot of, we have a lot of homes, but it's not like subdivision. And we may not have the foreclosures. So therefore, our value, I guess, is going to continue to be higher than, say, if you have a subdivision and they were all, a lot of them were new homeowners. So therefore, they couldn't continue to pay because of the situation with inflation and everything. So you're going to have a lot of homes in one little area maybe that have gone to foreclosure. So I guess I'm trying to see where I don't really think that's really fair, because our homes won't sell for a higher price just because we don't have foreclosures in our area or in our neighborhood.
Well, the sales is the mechanism that gives us the ability to be able to go in and make adjustments according to what the market is doing. And as I indicated earlier, our adjustments are going to either be higher or they're going to be lower based upon what the sales are doing. If you're not in a neighborhood, then we're going to value you based upon what we group you in a sister neighborhood or a partner neighborhood in order to value properties that are very similar. So when we look at the overall breakdown of what's going on within the county, there could be adjustments that we have to make either upward or downward based upon what the overall, I guess, market is dictating. So we have to make adjustments accordingly. If there is a downward turn in the market, I can assure you we're required by the Department of Revenue to follow what that trend is. And if we're not following, we are cited from the Department of Revenue that we're not in compliance as far as valuing properties at their fair market value.
Okay, I guess my final thing is can a resident come to the assessor's office if when the sales are going down and we get a new tax bill and say you're just within, say, $1,000 or $2,000 fair market value than what you had the year before. Now I understand now that we're a year behind, so it may take 2 years before it catches up to us. Can you tell us what area that we are in and how many houses maybe that foreclosed or how many houses sold, how you based what the fair market value is?
Yeah, anytime you receive a notice of assessment from us, like I stated, you will receive that at the latter part of April. Once you receive that notice, it's going to have information on there that is important related to your particular neighborhood, related to your property, related to the previous year's value and the current year's value. If you disagree with any of that information at that particular time, you can file an appeal or you can go through that process and have us to come out and revisit your particular property, just to make certain that the information that we have is correct as far as for our valuation. So You can't just decide at the latter part of the year when you receive the tax bill. You have to do it once you receive that notice of assessment, because by state law, we have to do it within those 45 days. If it's outside of those 45 days, I don't have any latitude to make any adjustments.
I understand that, and I did go within the 45 days when I have been up there like 3 different times questioning my tax bill. But I never did do the appeal process because I was traveling at that time a lot and I would not be here. So that's why I'm asking for what I could do in the future if I'm still here. So thank you very much for your information.
Okay.
Okay, I have a question. Catherine Lynn, I do see you, but I wanted to, since she's speaking on this topic, can you go over Director Barkley about Q Public and that they can appeal there? And also there's another question in the chat. How do they find out about the property tax sale information? What properties are up for sale?
Okay. During the month of
Really
April,
didn't answer my thing. They never did.
Rebecca, can you mute, please?
Yes, I will.
well, let me back up though. I do want to make certain that I'm answering every question that is asked. So she stated that she didn't hear what, I guess she didn't get her answer that she needed. So let me make sure that I give her the answer. Is there any, what is it particular you needed me to, I guess, what is it that you want to know that I didn't answer?
Well, I just wanted to know what neighborhood, what houses are in my neighborhood, what area is in my neighborhood. If I came up there, would you be able to tell me?
Oh, absolutely. We'll be able to tell you what houses are in your neighborhood. You can gather any of the information that we have based upon how did we establish your value. When you come in, if you filed an appeal, they would be willing to share that information with you to show you how everyone else in your neighborhood was valued, what their values were, what adjustment we made based upon the sales that occurred, or if there was an adjustment downward. You would have all of that information as well. All of that is public information. And we want for us to be able to clarify how we got to the value. We're willing to give you that information, and we don't hold that information if you request it.
Okay, thank you.
Okay.
You want to touch on Q Public?
Yes. And if during the time, once you receive the notice of assessment, this is between the month of April and I guess the latter part of April when we send these out. Usually it's around April 23rd, 24th, or even 27th or 28th. Usually it's the last Friday or next to the last Friday of the month that we send those out. Once you receive that notice of assessment, you don't necessarily have to come into the office to file an appeal. You can actually do it online through Q Public. And you can sit at your home, you can upload information, pictures, or whatever you may have to support why you think your valuation should be lower. So once you submit that information to us, we'll gather that information, we'll reach out to you, we'll come out and visit your property and make any necessary adjustments that we need to make. If we don't make any adjustment, we'll tell you how to go through the process to follow through with your appeal.
Excuse me, there's participants trying to enter. I don't know who's the host.
I think Commissioner Washington.
Yeah, I don't see anybody.
They're not saying anybody.
I don't see anybody in the waiting room.
It says the host has another meeting in progress. And you're the host, Lisa.
Yeah, but it would just be this meeting. So maybe because
Did we go over our time?
Maybe.
No, we have we had 2.5 hours, so it's like till 8.
Okay, so we still have time.
Yes.
Yeah, I don't see anyone in the waiting room.
He doesn't see anyone. All right. Okay, I'm sorry.
I think there was a couple of additional questions.
Oh, yes, I'm sorry, Kathy, Catherine Lynn.
Hi. Okay, so I had a question for Director Barkley. You had mentioned before about how you keep track of permitting and additions and things like that that would kind of provoke a a new assessment to be made. But can you speak to the other end of that, which is if if you had something happen that devalued your property, like a tree came through your roof or took out your deck or something like that? I mean, are those things that as residents, we should bring to the attention of the tax commissioner? Is that something, or to the assessor, I'm sorry? And because obviously if you get, you lose some value in that, that your value would go down, but also if you have to pull a permit to do that repair, so it wouldn't be seen so much as an improvement that might up your value, but as a repair. That was my question, if that makes sense.
Yes, that makes sense. That's a very good question. You got to remember, our valuation date is January 1st. It's based upon the condition of the property on January 1st of each year. Whenever we review that, if a tree had fallen, let's say in the latter part of December, meaning that your property was damaged on December 1st, then you would see a downward turn as far as in the valuation of your property. If there was a permit or something that was done, we would have that information as well. We do have instances where there are fires from time to time. We get fire permits. Once we receive those, we have to make adjustments. For instance, if the home totally burned, we would have to only value the land and not necessarily value the particular improvement because it's no longer there on January 1st. So, and I'm saying this in a way that we don't necessarily, we want to make sure that we want to value everything correctly. And we want to assist, and we're not confrontational about that, but we want to value everything correctly. And our goal is to make sure that we're getting a great mark from the Department of Revenue. So our challenge is to make sure that we value in everything at its fair market value, and we also value in everything that is supposed to be valued. So that's our challenge.
We're gonna take one more question, then we're gonna go to the commissioner, because our time is up in about 30 minutes, okay? All right, let's, who was last? I guess Phyllis, because I just finished with Catherine Lynn.
Mine's just a quick question. Is it true that, like, when you're assessing the area, if apartment buildings are, and this is based on past experience, we had what was considered a pastoral view, then they built apartment buildings in back of us. When they do those kinds of things, where apartment buildings or townhomes, when they build stuff, our property value went down. How does that affect the change in zoning and stuff like that, our property values? So your neighborhood basically kind of stayed the same, but surrounding area changed.
Yeah, anytime you have something like that that has a negative effect on the valuation of a certain piece of property, that is going to attribute to, based on the sales are going to indicate people are not willing to pay that same amount that they used to be able to pay for before that particular improvement came. So we'll see it at that point based on the sales, and then we'll have a downward turn in the market.
Okay, so it doesn't happen once the apartment buildings are done. It happens once the apartment buildings are built, and then you see that people don't buy into the subdivision the way they did before.
Right. We'll either see that, or we'll see, for instance, if there's a change as far as in the zoning or something like that. If there's a change in the zoning, then they have to be zoned differently. Then the valuation of that may be different.
Okay,
the valuation of what will be different, of the subdivision that is zoned
it'll be
next
the
to?
valuation of all of the land that's around it.
Okay, all right.
Segue.
Thank
Perfect
you.
segue.
Okay, Catherine Lynn says she has one quick question, then we're gonna go to the commissioner. Catherine Lynn?
Oh, thank you. All right, here's my question. So I would like to understand how land value is calculated, because there are parcels in my neighborhood that are 0.2 something acres, and they are taxed at the same value as one that is 0.99 acres. So there's no proration. So I'd like to understand how land value is being calculated because our land value's more than doubled this year.
Okay,
Thanks.
That's actually a very good question. We do get asked that from time to time. Why are all of the values the same in a particular neighborhood?
It won't take long to cook them.
Okay, Ms. Samuels, can you mute your,
Yep.
or the host can mute?
Well, yeah, we got.
Are you
Well,
through, Director Barkley?
No, let me finish up.
Okay.
What you'll see is that the reason that the valuation is the same, because a lot of times when it's in a particular neighborhood, the developer doesn't really add any real value to each one of the different lots. There's not a change from one lot to the next lot, even though one may be a little bit smaller or larger than the other. They all are within a subdivision. Now, there's a change or a difference in the valuation of those if it's a corner lot, or it may be possibly in a cul-de-sac, or if it has water frontage, or it backs up to a creek or something of that nature, then you may see some difference as far as in the valuation of that. But if it's in a neighborhood, theoretically, it's all valued the same based on the lot, unless you get a, let's say, a double lot or something of that nature, and they add those together and it becomes a larger lot to the point where we may have to make an adjustment. But theoretically, all of those lots are valued exactly the same. But if you move up into a point where we're talking 5 acres, 3 acres, 4 acres, then those are valued based on small tracts, and they're valued differently. But the lots within the neighborhood are all valued the same, unless it's a corner lot or something of that nature.
Okay, thank you, Director Barkley. We're gonna move on to Commissioner Washington, because our time is running out. Thank you.
Thank you. I did see Whitney had a question about tax sale properties. So tax sale properties will be listed, will run in the newspaper for the 4 weeks prior to the sale. I don't do a tax sale every month. Over my term as being tax commissioner, I average about 2 tax sales a year, and they happen at different times of the year. So the easiest way to find out which properties will be on my tax sale is just to call the office or check the website, because I'll list the properties on the website as well. And I'll actually list the full list that we start with. We usually start with about 200 parcels. And as people come in and they pay, then we remove that from the list. So the most updated information is going to be on our website. And I did see that Ms. Charlotte did say to check the paper. There will be foreclosure properties in the paper every month, but the ones that are listed from the tax commissioner's office, they will be listed as the sheriff's sale in the Rockdale Citizen. Okay, good evening, everybody. My name is Tisa Smart Washington again. I am the tax commissioner here in Rockdale County. And I was going to talk about understanding your tax bill, just walk you through how we calculate the taxes that you end up with, but the time is getting long. And so I'll be happy to come back another time and talk about that and walk through that presentation. But Director Barkley really did walk through some of that at the beginning of his presentation. There are a couple of things that I just want to make sure that everybody is aware of. He said a couple of times, he talked about the value on January the 1st. That's what we go by. That's what his office, that's the driving date for his office as well as mine. So when you receive your tax bill at the end of September, it is going to be based on what was going on with that property on September the 1st. So if there was an exemption that was in place that's different than the one that you have now, it will be on that property tax bill when it comes out in September. If there was his example of a fire, if there was a house on that property on January 1st and on January 2nd, that house burned down, you're still going to get a tax bill for that house. Now, come the next January the 1st, then you'll have a different valuation. It's especially true when it comes to exemptions. So in order to qualify for the senior exemption, you have to be 65 on January the 1st. And so, we have a lot of times that people turn 65 throughout the year. They come in and they want that senior exemption. It won't be on the tax bill for that year, but it will be on the tax bill for the following year, provided that you applied for it. That's what a lot of people need to understand as well, that you actually, if you have a standard exemption in place, you still have to apply for the senior exemption in order for it to be applied to your tax bill. But you only have to do it once. So you don't have to go in and apply every year. We keep that information in our system. You cannot stack exemptions. So if you qualify for, say, a senior exemption and a disabled exemption, it's still the same one exemption that you receive. There was, if you are a veteran, this year, you were probably very excited when you got your tax bill because there were no taxes whatsoever on your tax bill if you were 100% disabled vet. And that is because my system this year did apply those exemptions twice. And so we sent out corrected tax bills. We caught it very early in the process, and we sent out corrected tax bills. But you're usually, what you're going to receive is the higher of the exemption that you qualify for, or the highest. So there are some bills that may have a senior and a disabled vet exemption on it. You're going to receive the disabled vet because that is the higher of the two. Homestead, someone asked earlier if you get a homestead in another county, about having it in another county, you're only able to get one homestead most times. Am I right, Will?
Yes, that's correct.
There are a few little caveats, but for the most part, you're only allowed one homestead exemption. And it is incumbent upon you to contact the tax assessor's office when you move. You have a change of address if you need your homestead removed because you're applying for homestead on a different house. So even if you move within the county, his office may end up finding that information out, but it's better for you to go ahead and let them know, I no longer live in this property, remove my homestead because I want the homestead on the new property, because you just don't want to get caught having two homestead exemptions, because I think that there's a penalty associated with that, unless you fall into one of the other categories. And there are a few caveats to that one homestead exemption available. I did write that down I think I answered that about the county and the city taxes. I don't collect city taxes. So if you, I have a good working relationship with the city. So if we find out that there is a homeowner that may be paid one and not the other, then we'll work with you. I tell my staff all the time that we are charged with collecting the taxes, but we're charged with collecting what we're supposed to collect, and we're not supposed to collect anymore. We're not in the business of making money for the county, but we also have to make sure that we collect what we're supposed to collect. Curtis, you had a question?
Yes, with the increased inflation and the increased millage rate, and I'm sure that there's some that stand a chance of falling into that bracket of losing their home to taxes. Is there anything that the county or the commissioner's office have in place or are going to be considering to prevent that from happening?
Well, I would say this. Tax, for me, this is just my personal philosophy. I don't want to take anybody's home to tax sale. Not one person. You will find that if you come in and you ask any of my coworkers, everybody that walks through the door is my neighbor, because I live in this community too. And I don't want to sell any of my neighbors' homes. Tax sale is the very last resort when we have sent letters and made calls and sent letters and sometimes knocked on your door, and we still have not gotten a response, because again, we are charged with collecting what we're supposed to collect. Then we'll take the property to tax sale. But we do everything in our power to make sure that we can make that tax burden as manageable as possible. So one of the things that I do in this office is that I offer tax payment plans. We'll set you up on a 6-month payment plan. You come in, you make a down payment, and then we'll set you up with the payment plan for the rest. What I try to do is, and I've tried different variations of this over the years, I try to make it as manageable as possible, but not so small that we're running into the next year. We want to make sure that if we set you up on a payment plan, that the taxes can be paid off before the new tax year comes. Because, and that's done for two reasons. One, you know, if you can't pay 1 year, you're not going to be able to pay 2 and 3 years. So we don't want to get you so down the rabbit hole that you can't really dig yourself out of that situation. The other reason is that I do that is because we are required by law to charge penalties and interest. And so the longer we let that tax bill linger, then the more penalties and interest you end up paying, which means that you're paying additional monies that you should not have to pay. And so if we can help you get that paid off as quickly as possible, then it's better for you as the taxpayer, and it's better for my office because we're doing, you know, what we are supposed to do. I would say this, our last tax sale, we started with 400 properties on our tax sale. When we started working on our list, and on tax sale day, we only took 4 properties to tax sale. We were able to make arrangements and work through issues with all of the 400 properties, 400 plus properties that we were only able, we only took 4. And of the four that we took, they were all commercial properties. None of them were residential properties that we took to tax sale. Now I say that to say that we put a lot of people on payment plans. Other people were able to kind of, you know, work with, you know, kind of, you know, get the funds together in the way that they were able to do that. But we need to make sure that you adhere to the payment plan, because if you do, then you can get on one every year if that works with your budget. But if you don't, then we won't allow you to do it again.
And those I'm sorry, those are mostly residents that own their home. If you have a mortgage, it's usually escrowed and they don't usually lose their property because of tax. If it's escrowed.
No, because the banks will go ahead and pay. But you know, to tell you the truth, back in 2008, I wasn't in the office, but I've heard stories that even back in 2008, that because banks were closing left and right, they weren't even keeping up with the property taxes in that way. So one of the things that we want people to be aware of is that, you know, when that tax bill comes out, we're going to send it to the homeowner. We do not send it to the mortgage company.
Right.
Now, most mortgage companies will contact us, and then they'll receive the file. They'll receive the information from us, and that's how they will pay your tax bill. But we actually don't send tax bills to mortgage companies. So we ask that if you get the tax bill and you're not sure, if you know you have an escrow account set up, but you're not sure if your mortgage company has the most up-to-date information, just forward that tax bill to them so they know what the tax obligation is for that year.
But when they know when you send the tax bill to the mortgage company for collection in what is it, November?
But we only send it to them if they request it.
Okay.
And so the bigger banks, of course, you know, the Wells Fargos of the world, they contact us early in the year. But if you are with a smaller lender, they may not contact us. So just make sure, especially if this is a new loan that you have with them, make sure that you forward that bill to them so that they have the most up-to-date information. And one of the things that we're saying this year is that if you don't have an escrow account, if you do have an escrow account, do not pay us. Sometimes we have homeowners, because they get that bill, they'll come in and pay the bill. And then the mortgage company will pay us. We take the first payment. So if you as a homeowner pay and then your mortgage company pays, your mortgage company will get the refund. And for some people, that's fine because they'll eventually get the funds. But if you were not expecting to pay a tax bill this year and you went ahead and paid it, then it's going to take you a little bit longer to receive your funds. So we take that first payment. The second payment is what is refunded to whoever paid us last. So if it's the other way around, you may be getting a little antsy. You don't feel like your mortgage company is paying quickly enough. Then if the mortgage company sends in the payment and then we get your payment 2nd, we'll go ahead and we'll send that overpayment right back to you. We won't even apply it to the account.
There's a question.
There's a question. Catherine, you have a question for me?
Yes, ma'am. Okay, so you have already touched on this a little bit. We've got a lot of senior citizens in our neighborhood, and our particular neighborhood has just skyrocketed. I mean, I know a lot have, but ours has been a little ridiculous. And with that and the tax increase, a lot of them are just absolutely freaked out about how they're going to pay their taxes this year. And so one of the questions that I've been asked by them, and I've actually asked it in the tax office, but I didn't get a totally clear answer, was about the payment plans. So if they were to come in and request a payment plan, they would be required to pay penalties and interest past if they pass the 15th due date. And are all of your payment plans automatically a 6-month, or could they just come in and pay it as they could? Like if it was sooner, I mean, like if they wanted to pay it in 3 months.
Okay, I'll give you a little insight. This is a little secret between us all on here right now. So there are a couple of things, just practical operations kind of things that happen in my office. Tax bills are due November the 15th. And it is still a manual process for us. We don't have a machine that's kind of running these tax bills through. We are keying in the tax bills as they come. And so we never get through all of the mail by November the 15th. And we'll take the postmark. So if it's postmarked on November the 15th, it won't get to us until after that. And we still take it as receiving it on time. And so in reality, we're still processing payments into December. So I don't apply any penalty or interest until all of the tax bills have been processed. Now, once all of the tax bills have been processed, if there are still bills that go unpaid, we do apply the late fees and the penalties back to November the 16th. So you have a little bit of time in there. As far as the payment plans go, I actually don't allow anyone to get on a payment plan until January the 1st. And the reason that I do that is because it is only for 6 months. And technically that bill is not due until November the 15th. So what I don't want you to do is burn up that 6-month period during a time where the bill is not delinquent. So if you're still delinquent on January the 1st, then we'll go ahead and we'll put a payment plan together. You won't be charged penalties and interest for the time in between, but we'll put you on a payment plan then, and that gives you a little more than 6 months to actually pay off these bills. If you come in and you pay off the bill early, then you won't be charged any additional payment penalties or interest. And we just add a little more to your payment so that it covers any future penalties and interest. But the interest is 0.5% a month. And the penalty is 5%, but that's not even charged until 120 days delinquent. So you're paying nominal fees if you are able to pay that ahead of the 6-month schedule. And if you're not, it's already factored into your payment.
So if someone paid a partial payment on the due date and they still had a balance due, they should wait until January 1st?
If they pay, I would suggest that they pay as much as they can, because the penalty, the interest is going to be on the balance. So as much as you can knock down that balance, then you're going to be paying less overall over the long run. So pay as much as you can, even if it's, if we've had people that come in and they pay, $20 a week, or they pay, $100 here when they can, and then they get on the payment plan. We'll take any payment. We're not going to say, well, if it's not a certain amount, then we're not going to take it. We'll take it. And that'll just help knock down that balance a little bit more. So you're paying less penalties and interest on the back end.
Thank you.
Welcome.
We have about 6 minutes left, and it's real important to me personally that the citizens know where they can apply for this senior exemption, or where they can, not the same, where all the exemptions that they might qualify for, as well as looking at their tax bill to see if they even have them. What do you suggest that they do?
So they can they apply with the tax assessor's office.
Right.
But if you want to see if you have the exemption in place, just check and make sure. When you pull up your tax bill, there is, let me see.
Tell them where they can go to pull up their tax bill, Commissioner Washington.
Go to rockdaletaxoffice.org.
We can't hear you. You're talking,
Oh, you can hear me. rockdaletaxoffice.org. And at the top, there's a button that says view and pay property taxes. And it will take you to your tax bill.
And that was rockdaletaxoffice.org.
Yes. rockdaletaxoffice.org.
Okay.
And let me share this with you. Hold on 1 second for me. Okay. Can you see my screen?
No, we don't see anything, just your name. Screen sharing.
Yeah. Okay, why is this not?
Oh,
I don't know why it's not. coming up.
Well, he's still there. Because I said thank you to him and Tisa for, spending so much of their off-duty time. To
Cheryl,
provide-
you need to mute Cheryl.
I'm sorry.
Can you see my screen?
Yes.
There you go.
You can see it.
I didn't get to go here. Okay. On your property tax bill, this is a break on the middle of the property tax bill. There's a breakdown of the value and how much you're being charged by each entity. Here in the corner, you'll see if you have an exemption. If there's anything in here, there's a code in here, then that means that you have an exemption. And Will did share what those different exemptions were. But this is where you can check to make sure that you have an exemption. You can check here, and if you have a credit. So you see this host tax credit line. If you have this on your tax bill, then you know that you have an exemption. You just have to figure out which exemption you have.
Let me ask a question. If that host tax credit go to 100%, what will appear there?
Okay. So one of the things that I think it's important for people to know about the host is that the way the legislation reads is that 80% of collections, at least 80% of collections have to be used for taxpayer relief. It could be 100% of collections, but at least 80% has to be used for taxpayer relief. That does not mean that that's 100% of your tax bill. So in the years past where we've had 100% of hosts covering our tax bill of that county portion of our tax bill, that meant that there was enough collected that we could give everybody 100% credit. It didn't mean that 100% of what was collected was used for hosts. And what has happened is as more people have moved to our community and more people qualify for hosts, then that pot, and collections may not be as high, then that pot has to spread across many more parcels than it did in the past. So even this year, when we have 75% hosts, it is because there was not enough collected to cover everybody at 100%. Even if 100% of what was collected was used for tax relief, there wasn't enough to give everybody 100% credit on their tax bill.
Well, now I have another question. Had Rockdale County previously given 100% of the host credit?
That I don't know.
Okay.
I know that, so the amount that they've used from the collections versus the amount that it translated to on the tax bill are two different things. So in the past, we did see 100% covered, but I don't know how much of what was collected was used for that to cover everybody at 100%. But what I do know now, so I'll give you an example. In order to cover everybody at 100% this year, I believe, if I remember correctly, because I had to give this amount to the finance director, I believe that it was about that the county needed $24 million to cover everybody at 100%. But collections were at 21 million, I believe. So there was not enough collected to cover everybody at 100%.
Okay, I think Director Barkley left. I was going to ask him what effect will it have as far as county revenue. Oh, there he is. What effect will it have? Because you all are aware that we have a petition going to increase it to 100%, a bill that's been signed by the governor. What effect is that going to have as far as revenue? And then if there's a loss of revenue, will they want to increase the millage rate to make it up?
Well, that's the question that I really can't answer as far as what they're going to do with the millage rate. But I can say if they would have to either adjust the budget or raise the millage rate. I think I'm okay with saying that.
Yes, I think you are too. And I think that's a very good answer. This is just me speaking personally as a taxpayer, that I think it would be great if they did reduce the budget until we can come through this season that we're in and do some cutbacks. But I know that's not for the two of you. That's something to speak to the Board of Commissioners about.
Yeah, and I think it's important for people to know that even if 100% was used, it still may not, we're at 75% now. We may end up at 76 or 77%. And part of that is because the values have gone up. So now it costs more to cover each individual home, So all of these are connected, and it's not, you may reduce the number on this end, but then you have to increase the number on the other end to make up for it, And so there are a lot of moving pieces.
But Commissioner Washington,
yeah,
value goes up, and say the millage rate like it was 16.69, aren't they going to collect an abundance over the previous year in revenue because the value has gone up?
Absolutely.
Right.
Absolutely.
I know this is not a fair question. So is it always necessary to increase the millage rate when you're already that dollar is now worth $8? And then you get the interest of say 10% on, the interest rate is 10. And now that $1 has increased, the value has increased to the $8. Why would there need to be well, I don't think this is a fair question to you all, so I'm gonna stop.
No, it's not a fair question, but I live in this community too. And I have, you want answer, you want an honest answer to those questions.
Yes.
Even if they're not what you want to hear, you want to hear the honest answer.
Right.
And just out of professional courtesy, because I don't know what other things the commissioners were looking at when they decided to increase the millage rate this year. Because for as much as expenses are going up for us as individuals, they're also going up for the county. Even in my office, I have to pay a little more for paper, a little more for printing, a little more for all of the supplies that the ladies on the front line. So it will be better for them to answer the question.
Well, we do understand that there, just like we have increases, the county and everyone else has increases, and they have to come from somewhere. But it's just that I know the county has increases, but they decide to get it from the citizens that already have increases. And I'm gonna stop there because this is not fair to you all. You have control over that.
I would say this, and I've been in Rockdale for 20 years, man. I've been in Rockdale for 20 years now. And, when we moved here, and Chairman Richard Oden, when Richard Oden was the chairman, he would always talk about that our digest was not balanced. We had a lot more we have a lot more residential we have a lot more residential properties in our county than we have commercial properties. And because of that, if there is impact on the residential side, we feel it a little more than maybe other communities around us, because they can't, we can't necessarily take the hit the way that they can.
It looks like they're looking for the residents or property owners to be their source of revenue by them keep bringing in more development.
Well, I would say this. I think that the county has made a lot of strides in economic development, but a lot of that just takes a long time.
Right.
We got to put things in place in 2022 that's going to impact the digest in maybe 2032. It is slow moving. It'll eventually catch up. But I think that in anytime you make a decision that's going to reduce those numbers in one area, you have to look to make it up somewhere else.
Okay.
It's going to be inevitable, whether that's a reduction in the budget, reduction in services, increase in the millage rate, some other number is going to have to move because it's all connected.
There's one question left in the chat. How much of the tax digest is new parcels?
I don't know if you want, Tisa, do you have that readily available as far as what would be considered, I guess, inflationary growth compared to just regular growth? Because we don't really track it in that particular manner, based on just the number of new parcels.
And I think that, even as we're talking about taxes, that when you look at the values, even if the value goes down, if that millage doesn't go down, then your tax bill won't necessarily go down, even though the value, the value drops, or the other way around. Just because the value increases, that doesn't necessarily mean that your tax bill is going to increase, because it all depends on what that millage is doing. And so all three entities this year, they rolled back their millage sum. They didn't go all the way to the rollback rate, but they did roll back the millage sum. So we're all paying a little less than we would have paid had it stayed the same.
Okay, I'm sorry, everyone. We're gonna have to end this meeting. I just want to thank everybody for attending. I don't know if the recording's too big to share, but I will definitely attempt to get it cut maybe in half, and you might get 2 pieces. But I did want to share that in order to look at your tax bill to see if you're getting exemptions, the site to go to is rockdaletaxoffice.org. That's rockdaletaxoffice.org. And also we're going to be, Voices for Rockdale is planning on another meeting as soon as we find a meeting place. And we would like to give a formal invite to Commissioner Washington and Director Barkley, because we only had we had 81 registered, about 42 attended. There's many more residents that this need to reach. So we'll let you know when, I know you have a schedule, we'll let you know when we find a space big enough, and then a date.
And can I share one more thing?
Yes.
The tax commissioner's office now has a Facebook page. We have all of 6 followers right now. So we're sharing information about how to interact and engage with our office, and really good tips on property taxes, motor vehicle, answering questions that we get a lot of times from residents. We're answering them on our Facebook page. So follow us there. And if you have any questions, feel free to call the office, and any one of us would be happy to sit down with you, go over your tax bill, answer any questions that you have, set you up on a payment plan, or do whatever is within our power to get you where you need to be.
Speaking of motor vehicle, how can you go get your tag and not pay a fee? What form of payment do they take?
We take cash.
Okay.
At one point, we take cash and check. I know at one point we weren't taking checks when RJ was a tax commissioner, but we're taking checks, and we're not closed for lunch. We haven't closed for lunch for like 5 years. People still say, you're closed for lunch. We're not closed for lunch. So come on down, you can pay with a check, and we'll put that tag in your hand. But if you are in a rush, if you don't want to come and see us, and that's okay, or if you need to get that tag after hours, you can use the kiosk at Kroger on 138, and it prints that decal out for you right there.
And the number to reach the tax commissioner and the tax assessor is at 277-278-7676.
That is my number for the Board of Assessors, 7676.
Okay.
And I'm
Can you
760.
give me that again?
The Board of Assessor will, Director Barkley.
I'm gonna put it in the chat.
Okay, because I'm going to be calling you to talk to you.
And she can talk, Director.
Oh, listen, you're wrong. You're wrong for that, Corliss.
Okay, and
you can also, and if you prefer to text, you can also text the tax commissioner's office, and I'll put the text number in the chat as well.
Okay. Thank you. You guys did a wonderful job.
Well, thank you for volunteering and taking time out away from your family and your dinner. I can tell that you
I'm hungry.
I know I am as well, but thank you so much. We really appreciate it. And we look forward to hearing from you again. And everyone that attended, share that information with your friends, and make sure, and family, make sure that they're getting the proper exemptions. Again, you can go on the rockdaletaxoffice.org and look at your bill, their bill. It is public record, so you can help a neighbor out. And thank you again. Everybody have a good night.
Yes. Thanks, Corliss, for putting this together.
You're welcome. Thank you.
You did a wonderful job.
Good job.
Thank you.
Awesome.
Excellent.
I don't know if that will stay in the chat, the number, the information.
Yeah. Oh, here, I see it. Yeah.
Okay, so I'm gonna stay so that somebody can get it. Let me see if I can copy it.
Yeah, I can say, let me see if I can clip it.
Yeah, it's letting me copy. I'll copy and post it.
Okay, that'll be good.
You can actually save the chat.
What's that saying?
Oh, you can? All right.
If you click on the
Washington.
If you click on the 3 buttons at the bottom of the meeting chat, the 3 dots,
yes.
And at the top it says save chat.
3 buttons at the bottom of the chat.
Yeah, just save.
I don't see it.
I don't see it either.
Where you would type the message, there are 3 dots there where you would type.
Oh,
the
I
message.
see it on, yeah, I see it. Let me see. I need to shrink this window.
And it says save chat.
Oh, I see the 3 dots. Okay.
Yes.
Chat. Okay, thank you. And then I can share that chat. Right.
You can get all of the numbers and things.
Oh, okay.
Where does it save it at?
On your computer.
On the computer.
Well, thank you. Thank you for all the training. Commissioner Washington took time out to train me on this Zoom. This is our first one. This is our ribbon cutting. So we
Great
look
job.
forward to have more. Thank you all
Yes,
so much.
excellent job.
All right, you all have a good night.
All right,
Okay.
thanks, Corliss. Bye.
Bye. I don't know how to get out. But the screen, something came up over my screen.
I'm still the host.
It's supposed to be a leave.
Yes, but something had popped up over it. Thank you all. Good night.
I'm still the host. Do you want me to end the meeting for everybody?
Yeah, end the meeting, please.
Yeah, they take my taxes, then she took my host. Good night. Thank you.
Good night.